Today, we're diving into the world of stock analysis with a focus on T2 Biosystems stock. Please keep in mind that the information provided here is for educational purposes and should not be considered financial advice. The analysis presented in the video centers around a strategy that involves tracking trends to assess stock performance. This approach looks at a stock's historical movement to gain insights into potential future directions. Looking at the past few years, T2 Biosystems stock has displayed a bearish trend. Recent movements have further aligned with this downward trajectory. However, past performance is not an indicator of future outcomes. Interestingly, there's a potential shift in sentiment observed in the shorter timeframe. The analysis suggests the chance of a bullish shift, with a projection of a rise in the stock toward specific price levels. It's important to note that this perspective is based on a specific strategy. The video encourages viewers to wait for confirmation in terms of stock prices before making any decisions based on the analysis provided. Shifting the focus to T2 Biosystems stock itself, recent performance is discussed. The presenter accurately predicted a substantial profit of 89% for those who followed their guidance. This underscores the potential profitability of well-informed stock analysis. Technical analysis is used to indicate the possibility of further upward movement for the stock. However, given the underlying weak fundamentals, caution is advised. It's recommended to consider multiple factors before making investment choices. T2 Biosystems faces a challenge regarding a proposed reverse stock split, a step taken to ensure compliance with listing regulations. Corporate actions like these can impact stock prices, making it crucial for investors to stay informed about developments. The stock's high volatility is a common characteristic of biotech stocks. These stocks are known for their speculative nature and inherent risk. As always, comprehensive research and understanding are essential before investing in such sectors. The analysis also highlights a bullish update related to T2 Biosystems and the CEO's strategic approach. The video points out that their Discord channel serves as a reliable source of accurate information about T2 Biosystems. Relying on credible sources is vital when assessing stock-related information. Overall, the market maintained a bullish stance on T2 Biosystems. They stress that their approach doesn't involve shorting stocks but rather centers around scalping. Scalping refers to a trading strategy that capitalizes on short-term price fluctuations. The CEO's strategy for the company involves timing news releases in anticipation of a reverse stock split vote scheduled for September. This approach considers potential market reactions and aims to maintain investor confidence. With that being said, let's talk about some aspects to consider when investing in penny stocks. Investing in the stock market is a dynamic endeavor that offers a spectrum of opportunities and challenges. Among the most tantalizing yet perilous options are penny stocks, those low-priced equities that can experience sudden and dramatic surges in value. While the allure of quick riches is undeniable, it's essential to recognize and navigate the inherent risks associated with investing in penny stocks that have taken off. One of the defining characteristics of penny stocks is their inherent volatility. These equities can experience extreme price swings in short periods, driven by factors ranging from market sentiment to speculative trading. Sudden surges in penny stocks can be indicative of this volatility, which can work in both directions. While the promise of swift gains might be tempting, it's equally plausible that the same rapidity could lead to substantial losses. Penny stocks often lack the solid fundamentals that provide a foundation for established companies. When a penny stock experiences a sudden surge, it's crucial to assess whether the surge is rooted in actual improvements in the company's performance or if it's merely a fleeting market phenomenon. The absence of strong fundamentals can amplify the risk of investing in these stocks, as their price trajectory might be detached from their intrinsic value. The realm of penny stocks is not immune to manipulation, and sudden price surges can sometimes be the result of market manipulation schemes. Pump and dump schemes, where unscrupulous actors artificially inflate stock prices before offloading their holdings, are a recurring concern. Investors who buy into such schemes during their peak might find themselves caught in the aftermath as the manipulated prices plummet, causing significant financial harm. They also often lack liquidity, which can make executing trades at desired prices a formidable challenge. This is particularly true when a stock experiences sudden popularity and trading volumes increase rapidly. Investors may struggle to buy or sell shares at the prices they intend, potentially leading to deviations from their intended investment strategies. Navigating the landscape of penny stocks can be complicated by regulatory issues. These stocks might operate under less stringent reporting requirements, limiting the information available to investors. This lack of transparency can make it challenging to assess the true financial health and prospects of the company, further heightening the risks involved. Sudden surges often appeal to those seeking quick gains. The prospect of substantial profits within a short span can drive impulsive decisions. However, investing with a short-term focus can lead to overlooking crucial aspects such as the company's long-term growth potential and overall market conditions. Succumbing to the allure of rapid gains might blind investors to the potential pitfalls that lie ahead. When stock price skyrockets in price, it can create the illusion of overvaluation. Investors who buy into the stock during such peaks might assume they are purchasing an asset at its fair value. However, the market might correct itself, leading to a sharp decline in the stock's price. This scenario can lead to unexpected losses for investors who jumped on the trend without fully considering the stock's intrinsic value. Navigating these murky waters demands a cautious approach that involves assessing not only the stock's recent surge but also its underlying fundamentals, regulatory compliance, and broader market trends. Consulting with financial experts and considering risk tolerance are essential steps in making informed decisions. Ultimately, while the siren call of sudden penny stock surges may beckon, wise investors heed the call of due diligence and prudent risk management, thereby safeguarding their financial well-being in an ever-evolving market landscape. In conclusion, T2 Biosystems stock presents both opportunities and challenges. The stock is currently at a relatively high pricing in the short term, and I believe that the upward momentum still has a bit of room to keep going up.